We're pleased to welcome now Charles White, Managing Director, Fixed Income Capital Markets at Stifel Financial Group. Charles, always good to see you, sir. Thanks for coming on.
Yes, sir. Thank you for coming back this year. Good to see you again.
We were just talking about the attendance here. This event seems to get bigger and better, but just looking at the slate of speakers and the subject matter they're talking about, very relevant to those in the financial industries. They learn a lot.
They do, and this, when you really need that knowledge is when change is upon us,
yeah,
right?
It's true.
And I think the timing was a little bit intentional. I'll give it to them, but I don't think it was. They thought it was going to be quite as intentional because this week, obviously, you had the election, then you had a Fed meeting, and now we have, what looks to be a new landscape financially and in banking in the United States.
Yeah. So, one of the things, Charles, I know you work in the industry. It's Stifel there, something that you guys pay a lot of attention to. The number of public companies in this country, I saw this statistic the other day, is about half of what it was in the 90s. And I think that's largely due to an onerous regulatory environment. Everybody in the banking industry, the financial industry, talking about regulations, probably more so than taxation. I think that's likely because the tax environment has been fairly static since the Tax Cuts Act was passed in 2017.
Right.
We know that's coming to an end, the individual provisions at 25. But we've had a significant change in just the regulations from government the last 20 years or so, and a lot of folks I think that are private companies that are prospects to becoming public say, I just don't think I want to do that because of leaping into a world where now you're under much more regulatory requirements from the federal government.
Right. And when you think about it, complex regulations do two things. They empower the regulator, right, because a simple set of regulations empowers an operator. But a complex set of regulations empowers the regulator, and it reduces the incentive for the company to grow or to become public or to take on that regulation because they've got the risk already.
Yeah.
But that regulation increases the cost and takes away the upside.
Well, as an investor, I mean, I'm just the average worker that has a 401k plan. I'm more limited, and there's a lot of upside occurring in the private owned companies, organized company that aren't public that I can invest in,
right.
And thus I don't have the opportunity to participate in the upside.
That's a side effect of it, right? And you've seen the stats in private credit and private equity, right, which is why that sector has grown so much because it's a way to get capital into the sectors that aren't public, but it cuts off the people we're talking about.
Yeah. They don't get to participate. So the private equity guys ultimately get all the upside.
Well, there's a reason why private equity returns have been better than public equity returns, and there it is. So you're right.
And these are the very people that the people who issue all the regulations are always smearing. But they're the ones that's making them rich.
Exactly. It's called an unintended consequence, right?
Upside down. Well, so since the election, getting a little political, what are your peers saying? Are they more optimistic that we're going to have a less onerous regulatory environment, that we're good to go to get the tax cuts extended, but more importantly, we're not facing the possibility of higher corporate taxes, higher net investment income taxes, which would have been big time for capital markets? I mean, is that kind of what you're hearing? Yeah,
there's a couple things here. One, I think, is the uncertainty of an increase in regulation and an increase in taxes has been removed.
Yeah.
And so what that does is, you take somebody who's running a business or building a business or wants to expand a business, it gets you in much more of a positive framework about your ability to do so.
Yeah.
So that's going to increase demand for employees and things of that nature. But the other thing that I think is so important here is that in the last 4 years, and COVID had a little bit to do with this, but the pull of power to a concentrated place like the federal government is onerous, right? You'd rather have the power at the state because the state's closer to the regulated entity, to the people. And so I think that there's a lot of optimism that is going to reverse.
Okay.
Right? And the power is going to come back to the states, back to the people. And that'll do two things. One, it'll reduce really the overhead that the federal government is to the nation, right? Number one. But number two, it'll reduce the influence and complexity of the regulation. And so overall, and you see it in the equity markets, right? I mean, the equity markets reacted strongly after the first Trump-Biden debate, or the only Trump-Biden debate, And that reaction took place again after the election, but in spades. It lasted 2 days post-debate, but I think we're just at the beginning of it now.
Yeah.
So the markets react to that reality that it's going to be easier to do business, and it's going to allow businesses to be more flexible.
Yeah. Well, hopefully as well, to my earlier point, we'll see more of these evolving great companies decide to try their hat at going public. You know, there's lots of opportunities in going public. I think a lot of these owners and these ownership groups of these companies say, we just don't want to deal with all the regulation. I think that's good for the country, honestly.
It really is. And we're in the middle of something like that right now. And you have to judge the value of going public with the cost.
Yeah.
And obviously the higher the cost is, the higher the value has to be. And so many people look at that and weigh that and decide it's better to stay private.
Yeah.
So it'll take time, right? It won't happen in January, but over time, I think number one, there's going to be a change in the code of regulation, right? The written regulation, but it's also the psychology we touched on a little bit earlier that will permeate the not only the entrepreneurs and business people, but the regulatory environment.
Yeah.
And I think that shift is underway, and a psychology shift can take place instantly, right? A legal shift.
It already has.
Exactly.
Looking at the markets this week.
Correct.
I mean, there wasn't any policy changes Wednesday. It was just this optimism that maybe we won't have such an anti-business government in place.
Exactly. And in a nation that has the debt that our nation has, you need that vibrant economy, that revenue stream. Gary Cohn, who was President Trump's economic advisor in his first term, put it well on CNBC one day earlier this week when he talked about how to reduce our deficit, the only way to do it is to grow out
growth.
of it.
Yeah,
because we know that no matter what tax rates are, you don't get more than about 19% of GDP in tax revenue.
Right.
Because you raise tax rate too high, you curtail activity, and then the dollars, the actual dollars, go down. But that really is the only way to do it. And the stock markets are reacting the way they are because they know that's coming. And now markets have a habit of pricing in, 4 years worth of activity in a week, right? So maybe you don't get that much upside from here. But I think the return of economic dynamism is what's taking place, and that's going to be powerful. And that's how you reduce the nation's deficit as a percentage of GDP.
Does it not feel like, Charles, that there are just a lot of folks out there that have been sitting on projects, sitting on expansion ideas and just new innovation for fear of what might happen in Washington? And it shouldn't be that way. And it just feels like that the air's been taken out of that balloon, and there's just this feeling that folks are ready to get going.
Yes. And I think there's some confidence that this time around in the executive branch that this administration will do things differently. They'll have more competent people. They'll have more people that understand exactly what you just said, right? That this is the environment that we need to increase innovation, increase expansion, and all those kind of things. Because of who the United States is, I mean, it's obvious, and there was a good slide this morning in our conference about this, is that our GDP, think of it just as our revenue as a country, is so far ahead of everybody else, but our growth rate is down probably in the middle. And so if you can get that growth rate up, then you can deal with all kinds of things.
Yeah. And we're poised to do that.
We are.
The Magnificent Seven I read the other day, their market cap is worth like more than you've seen this for Italy and France and UK. Yeah, combined.
Exactly.
It's incredible.
Exactly.
Only in this country is that possible.
Yeah.
And we've got to unleash the animal spirits that made those companies so great.
That does it. And as a matter of fact, a real good example, talking to somebody about France the other day who's in France, about 53% of their economy comes from the government. And anytime ours is about 21, 22.
Too much.
Maybe 23.
But not 50.
High. Yeah, it should be about 19, 20. But you see the difference. And so while we're, can have the growth we have, can have the revenue we have, and the rising standard of living, because we don't have that much of the economy coming from the government.
Yeah. I'm optimistic, and I feel even better after talking to you because you've sort of confirmed. I know you work in that world directly, and I got to believe you're talking to people saying, well, we've been sitting on these projects and these ideas, but we're thinking about moving forward with it now. And I hope that's what happens. We'll all benefit from it.
Yeah,
no doubt about
absolutely. It truly will help the standard of living of Americans begin to increase again.
And that's what we want.
Because it's been stagnant.
I totally agree. Charles, appreciate you coming on, man. I always enjoy talking to you. Charles White, Managing Director, Fixed Income Capital Markets at Stifel Financial Group, has been our guest. Coming up next, Catherine Mealer, Bank Analyst at KBW in Atlanta. We're at the UM Banking Symposium in Oxford, Mississippi. Stay with us.